Support, resistance, and trend lines, otherwise known as SRT, are powerful pillars in Forex trading. In this lesson, I'll explain more about how you can use SRT to determine the direction of the market, time your entries, and locate your exit points. Resistance can be thought of as a ceiling or high point in the market that price has struggled to break above, while support can be thought of as the floor or low point in the market that price has struggled to break below. In terms of supply and demand, resistance is the price level at which supply is strong enough to entice sellers, while support is the price level at which demand is strong enough to attract buyers. The goal is to buy an asset when the monetary value is low so that you can sell it for a profit when the monetary value increases. Trend lines are lines that can be used to connect high points and low points of price in the market to determine market direction. Trend lines can also be used as support and resistance as they allow traders to see patterns in the trend that could also create future trade opportunities. Welcome back, you guys. I'm going to be showing you guys how to mark up support and resistance. And even though we already kind of went through trend lines in the last training, I will briefly touch on that again as well, okay? So first off, when you're drawing up support and resistance, it is important to know what kind of trader you are, okay? That way you can know what time frame you may need to start marking up your support and resistance zones on, okay? So in this example, I'm just going to say that I am an intraday trader, okay? So I'm actually going to mark up my highest level support and resistance zones here on the 4-hour chart, okay? Then I will scale down to the 30-minute or the 15-minute to look for my entry, okay? So this is just an example, you guys. I'm not gonna actually be entering any trades. But I just kind of wanted to give you guys a gist of what it would be like if I was an intraday trader looking to mark up the charts and find a good position in the market. What I like to do when marking up support and resistance, you guys, is actually change my chart from candlesticks to a line chart. And the reason I like to do this, you guys, is because it just makes it a lot easier for you to pinpoint the highs and lows in the market without being confused with candle wicks. You know, as a beginner trader, that's something I struggled with a lot. I was always wondering, you know, should I include the wick? Should I not? So just changing it to a line chart, literally just, it removes all that extra confusion or doubt, okay? So as you guys can see, we do have the line chart here. We're on the 4-hour chart for EUR JPY. Now, when you guys are marking up support and resistance zones in areas in the market, you want to look for areas in the market where price has touched multiple times, okay? And when I say multiple times, let me just give you guys a quick example. Let's get a horizontal line. And I'm going to place it right here, okay? And the reason I placed it right here, you guys, is because we can see that price actually touched this area in the market multiple times, right? We have it one time here, we have it another time here, right? Another time here, and another time here. So we actually have 4 touches to this area, okay? So that lets me know that this is a pretty strong area within the market, you guys. And in order to continue to mark up support and resistance zones, you just want to continue to look for more areas like this, okay? Another thing you guys want to look for when marking up support and resistance zones on your chart are areas in the market where the ceiling became the floor or the floor became the ceiling, all right? And I know you guys are wondering what the heck am I talking about, but don't worry, I'm going to break this down for you guys in just a moment, okay? So I'm going to continue to mark up some areas of support and resistance so I can explain to you guys exactly what I mean. Now, since we are here on the 4-hour time frame, I'm going to make the lines for my 4-hour time frame. I'm going to make them pink, okay? And I'm just going to mark some more zones. So I have all of the zones that I wanted to mark up here on the chart, okay? And now I just want to show you guys what I mean about the floor becoming the ceiling or the ceiling becoming the floor. So you guys, we can consider our areas of resistance as our ceiling. And we can consider our levels of support as our floor. Okay, so let me just zoom in to a specific area right here and show you guys what I mean. All right, so you guys, we are currently looking at this area within the market, okay? This is the area of the market that we are currently paying attention to, okay? So as you can see, we have our level of resistance up here at the top. And then we have our level of support down here at the bottom. So there's a metaphor I like to use when referring to price, support, and resistance, okay? I don't know if you guys remember back in the day, there used to always be these little candy ball machines right outside of the grocery store. You could just go ahead and put in a quarter and get one of those little tubes with, you know, one of those toys in it. And a lot of times you would be able to find one of those machines that had those bouncy balls, right? Those balls where you would just slam them against the floor and then they would bounce up to the ceiling, right? So that is the metaphor I like to use when it comes to how price moves in the market, okay? So if you have the market go up, right, to a level of resistance, our ceiling, right, the ball is going to hit the ceiling and do what? Bounce back down to the floor. So we can just consider price movement as like the ball bouncing up and down between the ceiling and the floor. Now, you know a resistance level is an important area in the market if it can transition from an area of resistance into an area of support. And what I mean is, you guys, you can see we have price come up to this level of resistance, right? It tested it as the ceiling, and then it bounced back down to this level of support, testing it as the floor, right? And then it bounced back up to the ceiling. But this time, you guys, it had so much power and momentum, it was able to break through the ceiling and up to the attic, okay? Now, the thing is, when you get up to the attic, you have a new roof, right? So we had price come up to our new roof, but then what price had to do is bounce off of this new roof and come back down to our previous ceiling, right? But the thing is, now that the ball is coming back down, now that price is coming back down, this is no longer a ceiling, right? This has now turned into a floor. And now our attic roof, right, has now turned into our new ceiling. So this is what I mean, you guys, about looking for areas in the market where the ceiling becomes the floor or the floor becomes the ceiling, okay? Because really all that does is confirm that price is retesting the same areas multiple times, making it a very strong area within the market. So now if I continue this example, right, we have this ball bouncing between our new ceiling and our new floor, right? But what happens is, you see the ball price, it actually breaks through this new floor and goes back down to the basement, okay? Now we're back down to the basement floor, okay? And once we can get price to come down to the basement floor, it's going to bounce off of this floor and retest that previous floor as a new ceiling, okay? So again, now this is our new ceiling. And now this is our new floor, okay? And we can see that price has retested these areas, both the ceiling and the floor, multiple times, okay? letting us know that these are strong areas within the market. So I hope these examples helped you understand exactly what I mean. So now I'm just going to go ahead and continue to mark up some more support and resistance areas, just so you guys can have a better idea of how to do so. So we did mark up these zones here on the 4-hour, but like I said, I'm an intraday trader, so I'm going to be looking for my entry on the lower time frame, like the 30 or the 15. So that means I'm going to go ahead and scale down one more time frame down to the hourly. And then what I'm going to do here on the hourly, you guys, is I'm going to find more areas of support and resistance, but this time I'm going to make the lines a different color, so that way I can be able to tell what zones are from my 4-hour time frame and what zones are from my hourly time frame. Okay, so I do see one right here. I'm going to make this blue. And you guys, that's actually all I want to go ahead and mark up, because this is what is most relevant to where price is currently at. Let me just say this disclaimer, okay? Because when I first started marking up charts, I felt like I had to go all the way back to see what the charts were doing all the way back in 2002 in order to determine what price was going to be doing today. Okay. No, you guys, you do not have to go that far back in time. You really want to make sure that you are marking up your support and resistance areas near where price currently is. Okay. Because yes, history does play a huge part in market movement, but also you have to understand that we need relevant history, right? So going back so far in time really isn't too relevant. So yes, I have my 4-hour zones here represented in pink, and then I have my 1-hour zones here represented in blue. So now that I have marked up my support and resistance zones, the next thing I would want to do is determine the overall trend. So I'm actually going to scale back up to the 4-hour really quick. I should have did this on the 4-hour, but it's okay. And I can actually see that this market is currently trending up. So I'm going to go ahead and just draw a trend line. I'm going to select my trend line tool. And if you guys can remember, for trend lines, I am just going to plot it at the lowest point, right? And then I'm going to attach it to the next higher low in the market, and then the next higher low in the market, okay? And then I'm just going to go ahead and extend that line outward. So this does show me that this market is currently moving in an upward direction. So now that I have marked my zones, I have marked my trend line, if I want to go ahead and find an entry on this pair, all I would do is go ahead and switch my candles back, right? Look, you guys, everything is still saved, okay? So you can definitely switch from line chart to candle chart at your own convenience. But yes, I am going to change it back to candles. And now that I know that this thing is buying, what I would do is scale down to a lower time frame, like the 30-minute. And I would just wait for price to come up to one of my zones, okay? So right now I can see that price is right in between one of my 4-hour zones and one of my 1-hour zones. So when I can get price to come up here to this 1-hour zone, I would just want to see how price reacts here, all right? Are the candles going to start to show some exhaustion? Is it going to start to wick a lot near this zone, right? If so, that could be an indication that price is potentially going to turn around and come back down to my 4-hour level of support, okay? So I do want to tell you guys the reason why we did make these lines 2 different colors is so you guys can understand which lines are stronger than the other. So trend lines, support, resistance zones marked up on higher time frames, those are going to be a lot stronger than trend lines, support, resistance zones that are marked up on smaller time frames, okay? So basically what that means is, since I know that this zone is from my hourly, I know that this is much weaker than a zone from my 4-hour. So that tells me that there is a chance that price could come up to this zone from my 1 hour and still break through and continue up to this next zone from my 4 hour. Okay, because this zone is not as strong as this zone. So yeah, again, I just want to reiterate, once you mark up your support and resistance areas, you just want to scale down to your desired time frame, and you just want to wait for price to come up or come down to one of your support or resistance areas and see how price reacts to that area. Once you can determine how price is reacting to that specific zone, it can give you a better idea of what price is going to continue to do in the future. So yeah, you guys, it's just that simple to mark up support and resistance on your charts. I hope you did find this training useful. If you have any questions, you guys already know how to get in contact with me. But that is all I have for you today. That concludes this lesson. If you have any questions or remarks, please join my discussion board and make them known. Feel free to follow me on social media and leave this emoji under a recent post for a follow back. Thanks again for tuning in to Money with Mari, and I'll see you on the next episode of Forex 101.